Okay, what is going on, guys? Welcome to Stock Talk with Nico Criticos. It's been a while since I did a video, but today we're going to do some reviewing of my top 10 stock picks back from April when the market was crashing. And I was pretty much posting a lot about why I'm loading up on all these different stocks. And pretty much everybody was saying that, it's going to keep crashing and Trump is just going to make things worse. And it's just the beginning of the crash. And I was very confident that it was going to be over quick, and that was a great opportunity to be buying. So let's get into what my top picks were, and let's see how they have performed. If we go back, I posted this on April 3rd on my account, Stock Talk with Nico Criticos. And here we go. My top 10 stock picks: Nvidia, Amazon, Microsoft, AMD, ASML, TSM, SMCI, ELF, Meta, and the QQQ index. So, just looking at this, so let's start with Nvidia. I mean, some of these I sold and some of them I kept. Okay, so let's go to Nvidia. Nvidia is one that I did sell because I just felt like they were getting really big, and the company's over $4 trillion now. So just let's see, it was pretty much in the last 3 months, the stock is up 63%, right? And that's since April 16th. So it actually is up more, right? It's actually up more from when I posted. Well, yeah, so I posted this on April 3rd, right there. So pretty close to the bottom, right? Pretty much the bottom at about 100 bucks a share. But yeah, I mean the last 3 months is pretty close, $104 a share on the 16th. So the point is the stock's up over 60% in the last 3 months. So that one is a huge grand slam. Again, I sold out, made my money with that one. I was happy with it. In from my perspective, I just feel like they're on top of the world right now, and once you're that big of a company with that much growth and that much market share and that much, technology and everything, I just feel like the stock can't run that much more, right? Like I think this is probably the top for the stock, and I think we're going to see it probably, act like how it did during this period where, for 6 months, it'll probably just stick around one price. That's what I'm expecting. Next stock, Amazon. This is one that I've kept, and that is mainly because this is one I don't think is overvalued. This is one where, so past 3 months, this stock is up 26%. Definitely not as good as Nvidia, but still, I mean, it's 26% in 3 months. That's pretty good. I'm only up 7%, which is not that good. And that's just because I bought this stock late. I think I was probably buying this back like in March. And of course I bought some shares in April, but not enough to bring my costs down. And that's why I only have, $207 cost basis when it could have been, you know, like 160 or 170. So it is what it is. But the point is Amazon is one that I'm holding because I think this one can run. I mean, real quick, let's look up what the PE is on this. I don't think this one is overvalued. And I heard that Jeff Bezos has been selling some shares and that actually hurt the stock. I don't know to what effect that's, really having a huge impact on the stock, but forward PE of 35, okay? And let's see. I mean, again, look at the last couple of years. We're looking at up to 42. 35 is not that much. And Amazon is still a growing company to me. I mean, look at their EPS, 5.5, 6.2, and 7.2. Revenue growth of about 9% a year. It's nothing insane, but it's still for how big they are, it is insane that they're growing at those rates, right? Because the market cap is $2.3 trillion dollars. So even if you're growing at 9% a year, that's still really good. So this one I'm holding on to. That's it. I'm holding on to Amazon. To what price? I don't really know. I would say, probably I like to look at things on a PE basis. So if it's at 35 now, maybe if it gets to 45 or something, something like that, um, then I would sell Amazon. But who knows? Amazon is also one that could very well go up for the next 5 years. So who knows? I'm not really planning on selling that anytime soon. Then we go to Microsoft. Microsoft is one that I did sell, which looking back, I sold too early on this one. If we scroll down here, we can see I sold out my shares at what, 462, 467 was around the time I was selling, and we're at over 500 now. So I did miss out on at least a couple $100 on this. But again, if you go back to the valuation, I believe I just sold it because I was like, the valuation was looking pretty rich. And I just thought, see, so 4P, yeah, 4P of 33. So it's at the highest it's been in the last couple years, right? So I was probably selling at like a 31 or something like that. I don't know. I was happy with my gains. I mean, let's see. How much is it up the last 3 months? 32%. So a little bit better than Amazon. I was happy with my gains in that time. Again, we're talking it's only been 3 months since that crash and since I posted these stocks. So even if you make 10% in 3 months, that's really good compared to, annual averages. But of course, those times when the market crashes, those are your opportunities and your chances to make a lot of money, like 40, 60, 80% plus in a short period of time. You can't do that. You're not going to do if the market's already up big for a year or two straight, you're probably not going to get those gains like that. You can get when the market crashes, that's when you can get those big gains in a short period of time. That's why all these stocks are up, a lot in just in 3 months basically. So yeah, sold out of Microsoft. I mean, again, you can see how as it hit like over 450, as it got to about 450, you can see the growth has been very slow, right? Just like a dollar or two per day, it's pretty much went up. So, but by the time it was in the 460s, I was pretty happy with that, amount of return on my money. So I was fine with that. Sure, again, sure, I could have kept it longer, made more money. Maybe that would have made more sense. Maybe I should have sold just half of my shares. But point is, I made some money and I was happy with my gains. If Microsoft was to fall again, if I can get Microsoft under 450 or something, or let's say $400, I would love to buy Microsoft again. Next stock, AMD. This one I'm very happy with. Okay, very happy with. This one is one of my favorites on the list. Past 3 months, 82% gains on this. That's just phenomenal, unheard of. Doesn't happen very often. So, and this was one that I had a nice position, and I had 23 shares at a cost basis of $114. As you can see, the bottom was about 78 bucks, which is a good amount cheaper than my cost basis. So yes, I could have gotten it cheaper, but I didn't really care. I was pretty happy with my I mean, you're not gonna have the chances that you have your cost basis as the bottom of the stock are very low. I mean, every now and then I happen to get lucky and time it perfect, but if you can get within, I don't know. I mean, really, so if you could get, I would say around $100 or below for this stock, you're getting it you're very lucky at the price you're getting it. So me getting it at 114, is it the best price? No, but it's definitely good enough for, where the stock is now and where it is probably going to go over the next couple of years. But I'm up 40%, $1,000. I was happy with, the amount of shares I had in this one. Everything just looked right. I mean, you looked at Nvidia, you looked at the chip market, and this company was not very big. It was only what? It was probably almost half of that. So it was, yeah, $130 billion dollars. No, yeah, if not less. Something around there, 120, $130 billion market cap. Not very big considering you get all these chip companies. Nvidia is $4 trillion. That makes AMD look like a baby at 100 billion. So there was just all these different things. Now I think the news just came out that what? Here we go. Major revenue upside is expected for AMD after Trump lifts the China AI chip ban. Very interesting. I didn't know anything about that. I didn't really see that coming. That's not what I was betting on. But I think the news around this company is just going to get better and better over the next couple months. And let's see if so the retail investors are not buying this. Hedge funds just sold a bunch. And then the hedge funds is really what I'm concerned with though, because so if they just sold, yeah, Q1. See, so I want to say now when news comes out for Q2, this in a couple of weeks here, when we see what did hedge funds do with a stock like this, I bet you they have been loading up on this company. And their earnings are expected to grow big time. I mean, everything is just kind of in their favor as far as I'm concerned. I just think there's a lot of room for the stock to run right now. So hopefully we see the stock get to like $200 a share. But that's another one that's just, knocked it out of the park. Over 80% in 3 months is just insane. Next one is ASML. This one I still hold. I think I have about $4,000 worth. And this one is in my other account. Unfortunately, the stock is down big today. This stock has just been such a problem as you can see, it's almost been a year now. This stock is just not doing anything, and it does not make any sense. So yes, this stock is up a little bit the last 3 months, but really it's underperforming even the general market. So this is probably the worst one on the list. Even though this one technically is up, it's still compared to the other ones, this one is just not much of a winner. And it's very confusing and frustrating being that, what this company does and the moat they have and the industry they're in, the time we're in right now with, companies ordering all these AI chips and them being one, the biggest player that makes those machines. It doesn't make a whole lot of sense. What the news came out today is I believe they said, yeah, so tariff concerns, that was one thing. So I guess that makes sense. I mean, Trump is still negotiating with a lot of countries and stuff is still, changing all the time. So who knows? Any day now, good news can come out and the stock could go up 10%. But I don't know. This is one where it's disappointing that the stock has performed this way. Um, but I still, I'm still bullish on it. I still think this stock will be 900 or $1,000, hopefully in 6 months or something. But I definitely was expecting it to happen sooner, and I did not think this was going to last, 9 months or whatever, where the stock is pretty much just flat. That's not good. So that one's a little bit, I wouldn't call it a loser. I would just call it a little bit of a disappointment. And it's just a little bit of a sleeper. That one is taking some time. TSM. Okay, this one I think I got some. This one has been fantastic too. Taiwan Semiconductor. I think I got some shares left. I only have 4 shares left because I've been selling some, which again, it's like Microsoft looking back. It's a little bit of a disappointment because yeah, again, I could have made a couple extra $100 if I would have just held onto my shares. If you go down, the last time I was selling was, see, I sold a share at 216. 216, 206, one even 194 I was selling. But as you can see, I was buying this at 150. So again, it just goes back to I was making pretty good money with it. It's like, what is this one up the last 3 months? Yeah, 58%. I think that's the second best one on the list so far. 58% in 3 months is insane. I mean, you got to be pretty lucky to time these opportunities and get into these. So I don't know. This is just I'm still happy with this one. I like this one. I just think it's getting pretty close to where the valuation is kind of hot now. It's kind of rich. But then again, it's doing what they do and being in the space they're in and the moat they have. Now they got, the United States investing in them and stuff. They got the Arizona factory. They have a lot of good things going for them. But at some point you got to consider the valuation into the equation. And that's where it's like, okay, where do I sell this to where, I don't want it to top out at this price and then it goes back down to 200 and I lose all those gains. That's what I'm always thinking of in the back of my head is, where is that likely to happen? And again, that's not a good habit to put all your money into that, but I try to at least do it with a couple shares. That's why I sold a couple shares and I got 4 left. So, yeah, I mean, again, same thing with Microsoft. You're not going to time these perfect. You just got to use your best judgment and just kind of split it up into pieces. Sell some shares here, some shares there, and that's the safest, healthiest way to do it, I think. But again, Taiwan Semiconductor has been an amazing performer the last couple months, 58% in 3 months. And that's that one. Then we get to SMCI. This has been another great one. This was actually, I posted this in February or maybe even January, I was buying as my number one pick for this year. And at the beginning, it was phenomenal. Right now, it's doing good too. I'm up 79%. So yeah, I mean, it's phenomenal. But honestly, I did think it was going to happen a little bit quicker. This one has been a little bit of a sleeper. Here you look. So here, let's go to the last year. So here was last year, right? Then it fell big time there. I don't think I didn't buy it there. I was buying it like around Christmas or January. So right around here. And then I loaded up when it hit this day, when it hit 26 bucks, I loaded up that day. And then as you can see, it's right after that spike to 60 bucks. And I was like, okay, you know, we're gonna see $100 a share in the next couple months. Well, that didn't happen. It dropped back down, and then the past 4 months, it's been a sleeper. Just hasn't been. I shouldn't say it's not a complete sleeper because look at the last 3 months. It's up 66% in the last 3 months. So that's one of the best performing ones on this list as well. And again, I did sell some shares. Where did I sell shares for this? I sold at 43, 42, and 50. A lot of shares at 42 because it wasn't moving. So again, if I would have held on, I would have made a little bit more money. Maybe I need to lean in that direction a little bit more. But you got to be careful because then you get caught up where you wait too long and the stock drops, erases all your gains, you don't make any money, and then you got to wait again, and it's a whole process. So you got to learn how to time it right and balance the way you buy shares and sell shares and all that. So, but the bottom line is I'm up 80%, right, in just a couple months. So it's still a very successful investment. Then we have Elf. This one has been fantastic. This might be the best one on the list. Let's see. I sold out of this, which how has this one been doing lately? Okay, this one's down a little bit. This one has been flat now for the last what? 2 months almost 2 months. Almost 2 months, this will be flat around 110, $120, right? But we come down, I sold them at 128, 123, 123, right? So I sold it a good price. You see? That's the right way to do it. I mean, that's where you time it right and you say, okay, this valuation is getting a little bit out of hand. Not that. Let's go. I want to go back to here. Not, that's the wrong thing. Let's go to the valuation here. This has been what is this up the last 3 months? 111%. And that's not even at the peak. Where I was selling out there, I was up 140% on this. Well, I no, I don't think I was, but the stock was up 140% in 3 months. I definitely doubled my money on this though, because you go back, these shares were $50. You could buy these shares in the 50s. And then I was selling at 120, 100, it went up to $130. That's practically a 3x on your money in a couple months. That's ridiculous. That never happens. And again, what was the news that really helped this company out was when they partnered with Haley Bieber. When that news came out, that was huge. That was probably right here when the stock jumped up. But if we go to the valuation, forward PE of 28. So looking back, the stock was higher in the past, but I don't know. That 28 is pretty. There was a couple things. I think I saw tariffs were hurting the company because their prices has gone up so much or something. So there was a couple things, but again, I call that a success. Okay, I practically doubled my money in a couple months, and I was buying anywhere around here at $60 or whatever, and I sold it at 120. Okay, so that's a success. This would be a good example of a smart, successful investment, timed well, played well, and it was just I don't know, that was a good one on my list. It was a small company, so it's only $6 billion now. So I was buying it at like $4 billion. That's Elf. Then we get to Meta. Okay, Meta, I sold pretty much all of it. What I do is like, for like a stock like this, sometimes I'll just keep a little tiny amount just because then I could watch it. I like to watch it like that. And I also like to it helps me keep track of where was my initial investment price. So like with this one, you can see it was at 569 the last time I purchased. So I'll just hold on to this half share just until, it gets back to a good price again. Maybe if it comes back down to like 600 or something, then I'd like to load up on shares again, most likely, depending on what's the situation. But Meta, okay, so Meta the last 3 months, 38%. That's pretty good. Not as good as some of the other ones, but you know, it's still good. So where did I sell the stock at? I sold at 718 and 730, which again I sold before there. So I was probably selling at 700, between 700 to 730. So let's see. Well, actually, wait a second. No, I was selling earlier than that. I was probably selling maybe around here. Yeah, maybe around, I don't know, 680, 690, something like that. Anyways, you look at the stock now, it's at 700. It's at the same price that I was selling at. So, and that was months ago. So, not months ago, but it was June 27th, so almost a month, right? Around a month ago, I sold out. So again, I just look at it like what's the smartest, most efficient, profitable way to do this? And in this case, it's like the same thing with Elf. I sold out over a month ago at the same price, right? And now my money is just collecting interest in my account. So, and then, that way you wait till the stock gets cheaper again, you buy back in, right? So it's 100% most efficient, profitable way you could possibly do it compared to if I would have held on to these shares. Let's say Meta stock keeps falling, right? And it goes back down to 650. Okay, well then I just waited twice as long and made way less money. I didn't make any money because the stock went back down. You have to realize those gains. You have to take some profits when the stock is up on those high valuations. But that's Meta. That was a successful one, 38% in 3 months. Then finally, we have the QQQ. This one, I don't even know if I should. I guess I'll pull up my position here. But so as you can see, my this is my largest position, 220 shares, and past 3 months it's up 24%. Very good. 24% in 3 months is fantastic. I think even wasn't ASML around that percentage. Anyways, all those stocks I picked pretty much outperformed, right? They pretty much all of them outperformed, which is just, that's just amazing that those stocks can go up that much in that short of a time. But I mean, this one has just been fantastic. I'm up 16% and average cost of 477. Now, this is one where when will I sell this? Probably like this is one where I'm for the I can almost guarantee you that I'm gonna hold on to this for a while. This will be at least a year. This will probably be at least a year, if not 2 years. Um, I would not start taking. I'll start taking profits on this when I feel that the whole market is so overvalued, which it's pretty close to be honest. Most of the stocks out there, Apple, Netflix, um, Microsoft, you look at most of them are they're at the top really. That's what it looks like. Unless earnings skyrockets or something this quarter, those valuations are pretty rich. So, and it definitely, goes for the indexes like this. So, but with that being said, we just had this little correction here. So I don't know that's a tough one. I would say, I don't know. If it keeps going up like this, I might take some profits a little bit, 10 or 20 shares to start, but really this holding an index fund is like that's something that I'd like to get at least I like to hold for at least a year just to absorb the tax benefits and stuff. Um, but no, I mean I was very happy that when this was crashing when I bought it at $400 a share, and I mean I was just happy I got it at those prices. So those are my 10 stocks, and again they pretty much all outperformed. So this is just that's why you got to buy during those times. But thank you very much for watching, and I will see you in the next video.